Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, May 12th, 2023. S&P 500 currently sitting at 4108. I'm David Zarling here with international man of mystery, Ian McMillan. Again, we're below 4180, but we can still provide some quality information to our listeners. Ian, where would you like to start?
Yeah, I guess the same place we've been, starting off with another week where zero significant price action, at least in the S&P 500.
No, that's fair.
Typical reference point for quote-unquote stocks on this podcast, I guess you could say.
And the financial media will tilt Dow Jones or NASDAQ 100 or S&P 500, but all of them still apply.
Yes.
Still range bound by many metrics, even internationally, which we've given some extra coverage to recently. We've seen, something like the all world ex-US index still below important levels like $55 on something like VEU. At the same time, something like small caps, which are the other end of the spectrum, the other side of the range. So the things that we just mentioned, the higher part of their range, small caps still anemic, but still holding important, let's call it 164 to 170 level on something like IWM.
They're still holding above that.
They don't look great.
They don't. I mean, micro caps we take a step lower on the spectrum. Obviously, we know our mega caps, the best, NASDAQ, those types of things. But outside of that, and I'm not trying to play the whole, there's only 5 stocks holding up the market, but
it remains a narrow market.
It remains a very narrow market. I agree.
Bifurcated market. You bring up micro caps, they're below their range and breaking downwards. And that's typically a risk on area, whether we see that continue or not. I mean, it would be great information if something like IWC, a representative of micro caps, could get back above 103. That would be pretty important information. All caps IWM, if it can hold the 170 level and move higher, would be really important. That would match the thesis of a broadening out of participation, which we haven't seen yet. We haven't seen a massive broadening out of participation.
No, and I mean, you get random stocks that work here and there especially in the middle of earnings season, but there's still just not a lot of consistency. We see it in the breadth work we do internally. Obviously, it's been, other people have shared their insights on breadth on Twitter and things like that, but still remains a pretty bleak. I mean, look at New York, NYSE composite, value line, geometric. Well, it's been below its 200-day moving average for over a couple weeks at this point. Just a very, very lethargic. And we talk about that as far as major indices, but even when you look in other areas, take semiconductors, for example.
Okay.
NVIDIA's doing great, right? I probably will be putting money in NVIDIA here. We'll touch on some more on NVIDIA. AMD has held up well, right?
Yep.
But then you look at broad semiconductors.
Something like XSD
or SMA. I mean, they're not doing anything. So again, I say that as a microcosm of, your Apples and stuff are doing great, and that helps the broad market, and your NVIDIAs and AMDs are doing fine, and 3,000-foot view, to your average investor or trader, that puts a check mark on semis, right?
Right.
But that's really not the case at all.
Yeah, what's happening underneath the surface is
Mm-hmm.
different than what's happening at the cap level. And it remains to be large cap environment, whether we're looking domestically or internationally. You look at something like the Global 100, IOO, which is representative of mega cap global stocks. That's holding up better than most other places. You mentioned something like SMH versus XSD, but you also look at like RSP, something representing equal weight S&P 500,
Mm-hmm.
and that has divergent highs. The high from April is much lower than the high from February, while the S&P is up against those levels where it's May, April highs are matching February. Dow Jones is not, NASDAQ is, and in fact is above its February high. And then IWM, small caps, well below its February high. So there's this pretty decent spread that's happened since February, late February, which we all know is kind of when banks started to have some issues.
Banks still horrible. Still gonna have another horrible weekly candle. And I've said it before. I mean, it's really hard, both from a math perspective and just a sentiment perspective, to get the markets turned around. Specifically, obviously, things like small caps and micro caps, without banks participating.
Yeah, quite simply, if we're going to have small caps do well, you need to have some of these regional banking stocks do better. And while on one hand we have financials overall using XLF still holding above an important 30 level, which we've mentioned several times, KRE, representative of regional banking,
Mm-hmm.
we still have year-to-date PacWest down 79%, year-to-date Home Street down 77%, First Horizon down 60%. These are some relatively large regional banks. You have that on one side. And then on the flip side, you say, well, Apple covers all those things. Apple is that much
Covers them
bigger.
20-fold.
Right. It's that much bigger than PacWest and First Horizon that A, you don't see it, and B, does it matter? And that's where you go back to your price levels of financials, XLF staying above 30, extremely important. KRE representing regional banks at COVID lows, and that needs to hold.
We talk about a regional bank going bankrupt. Apple can lose or gain that same market cap amount in
Right.
a basic day of trading.
Yeah.
So, and it's just not saying it's right or wrong. I'm not saying it's anything other than that's just mathematically how indices work.
Well, and we're at a spot where this is actually something that Charlie Bleo shared is Apple and Microsoft. When we think about the S&P 500, the weighting of the top two holdings going back to 1980, Apple and Microsoft represent 14% of the S&P 500. That's the largest we've seen since 1980. So like early 80s, it was IBM and AT&T. They're about 11%. In late 90s, it was Microsoft and GE, which some clients might be familiar with recently. But Microsoft and GE were about 9% in the late 90s. In the mid 2000s, let's call it 2008, 2009, XOM, ExxonMobil, and Walmart were 7.7. And here we have Apple and Microsoft at 14% of the S&P 500. I'm sorry, but that covers pretty much all of financials. I should say all of regional banking in a nutshell. If you look at the weighting of the S&P overall, regional financials themselves are about 12%.
And you said it was 1980?
Yeah, it's the largest since 1980. So the past 43 years, we haven't seen an environment where two stocks have made up this level of percentage. I'm not saying that's good or bad. I'm sure people have opinions on that. It's just a matter of fact of that's what it is right now. And if those, like you said, a day of trading has more impact on Apple than it does over regional banks overall.
Mm-hmm.
Simple as that. And so does the regional bank issue have significance? Maybe, but the only way we would know that is if we saw financials break below 30 and KRE break below their COVID lows. That's TBD. And then you think about new financial tech like PayPal, which is breaking to new lows. So there's plenty of pain in the financial area.
Can't be. I use PayPal all the time.
Yeah,
Yeah,
wait,
look at
what?
that neckline at 69, 67.
Here you have PayPal breaking down. And I remember there was a podcast we did once regarding, new tech, new financial tech versus financials, but there's plenty of hurt in both areas. And the fact remains that there's more supply than demand. Let's not overcomplicate this thing. To me, Ian, do you think the biggest development this week is the dollar?
Well, it certainly has attempted another move higher. Nice big weekly candle. It's been holding this 101 level for, really 5 or 6 weeks at this point. The base never got stale, even like last year, never oversold. What a weird RSI.
And what Ian's referencing there is the relative strength index measuring the past 14 periods of relative strength.
Never got quote unquote oversold.
What time frame are you using? You're using daily?
Daily, yeah.
Okay. Weekly, it wasn't even close. Weekly, we never even got below 35.
Yeah.
Here we are, something like DXY on a weekly is engulfing, which means it's outside the parameters of the prior almost 5 weeks of information on DXY.
And I would say there's a bullish divergence there on the weekly too.
Yeah.
Very slight.
Do we get to be surprised if we see dollar strength going forward? Now, obviously, we're believers in follow through. And I actually want you to talk about this a little bit. When we look at something like VEU, so all world stocks minus US stocks, I think pre this recording, we talked about early May in VEU and what we didn't see. Can you walk our listeners through that?
Yeah, I think VEU, foreign stocks, and you can put VG.
Yeah, VGK, yep, which is Europe.
Same bucket. I think we're just kind of, JC Peretz made a good point on this, and I read this a few years ago from him, about when you have these, we'll call them bull flags, where you get your pull, you get your rally, and then you consolidate.
Yeah, you get your price movement upwards. And then
you get your consolidation, and there definitely hits a point of the consolidation where I think it's definitely a visual thing. I'm not going to put any type of like time frame on it, but where a consolidation just has taken too long. A bull flag that should have turned into its next leg higher, if that, I guess, is a good way to put it, just hasn't done so yet. And I think that there are some consolidations out there where we are now kind of running into that territory of, if this was gonna happen, like a health standpoint, like if this was a healthy consolidation or an uptrend, I just feel like a lot of these would have happened by now. We would have broke higher. We would be above our February highs.
I think using VGK, we're above February highs, but we're right up against the neckline, or what had been previous support is now potential resistance. Using VGK as an example.
I had VEU pulled up when we
got you.
Said that.
Let's expound on that, because on one side you have Europe, on the other side we're saying developed or all world stocks minus US. So Ian's point is that all world stocks minus the US is actually below its February highs, in an area of strength like Europe, which is above its February highs, but yet is up against its neckline or levels that it broke down from in early part of 2022 using either IEV or VGK. Those consolidations, you'd like to see them hold or break higher. And some of those, the way we're printing right now, which we have a little bit before close, you'd like to see those hold.
Yeah. I mean, obviously, as a support and resistance people that we are, you want to see support hold. And when you look at VEU, right, so it's 41% Europe,
Mm-hmm.
27% Pacific, and Japan's been good. Japan has been,
That has been a shining star out of
been,
the.
as far as foreign developed. It has continued higher the last, certainly this week it's had a good week. The last couple of weeks it's had a good, while Europe has stalled. Then you get more into your emerging markets. Like China's technically 9% of the EU. Australia's 5%. We know Australia priced in US dollar. We look at something like EWA, pretty lethargic, kind of just hovering or still down near its 200-day moving average. China also just consolidated. If we look at FXI, just consolidating around 200-day. Today it's going to be back below its 200-day moving average. So absolutely nothing going on out there, even from the big rally out of China, right? So we go back to the October lows. I mean, that still hasn't turned in, and I get it. It was a big rally from China, and I get the consolidation, right? That's what you would expect. That's what you want to see. You know, if something runs up 50, 60% in 4 months, but now we've kind of reached the stage where we've had both a price correction and a time correction in China at this point. We still kind of seem to be flailing around.
You're not seeing the follow through.
Yeah, no follow through.
And that's the same for VU overall, is just seeing that follow through in May, the beginning part of this month. I believe you even pinpointed to May 8th. Like,
yeah, wouldn't you have wanted to see the 8th be the follow through? I mean, that's.
And when Ian says that, for a listener that might be new or a client that's listening, and what do they mean by follow through? It's kind of like the equivalent of a batter at the plate, and they kind of check swing versus actually giving a good swing and pounding the ball, is not seeing day 1 being May 5th, day 2, May 8th, seeing the follow through. We didn't see that. There wasn't.
In a healthy market, you do.
Right.
There's pieces that, you know, whether it's Denmark or, you know, Mexico is held up.
It has.
Relatively fine.
And Argentina still at an important level.
Argentina, Brazil is going to have a decent weekly candle. I don't know if it's over its 2, and still, you know, into its 200-day basically. Also coming into its April highs. So it's just a lot of nothing. I don't know what we're waiting on. I don't. I'm sure the fundamentalists and economists would have an answer for you there. I don't know what we're waiting on to get this market to move in one direction or the other, but
I think we're waiting on either demand to outpace supply or supply to outpace demand.
Maybe we're waiting on the announcement of the new Twitter CEO.
Oh, man.
Now we got it. We can finally move forward with the market direction.
Yeah, move forward with our lives. But your point is made. There's some areas of strength internationally. They tend to be, it's an interesting dynamic with Japan on one hand, Europe pausing, Latin America, we're seeing Argentina and Mexico doing well. That's good and great. And when I say doing well, I'm just saying holding above important levels. I do think the bullish engulfing of the last 5 weeks of price information of the dollar using something like DXY is hugely important.
Yeah.
And it's happening right at a price level. So markets are not coincidences. And you have this environment where VEU, representing all world stocks minus the US, right up against important levels. You have Europe up against important levels. And you have the dollar strengthening right here, right now, along with gold up against that 2,000 per ounce level. And do we see weakness out of precious metals, specifically gold? We could use something like Bitcoin. Bitcoin showing weakness.
And Bitcoin kind of fall apart here in the now we're back below 27. So there's a neckline there at 27.
And this is all happening with dollar strength. So precious metal weakness, some international weakness, gold weakness.
Right off those anchored VWAPs. Who would have thought?
And here we have dollar strength. And this is happening in the face of, it was what? And maybe it's still a narrative. I try not to pay attention too much to the news, but weren't we just calling for a dollar collapse? Are we just on the verge of seeing the dollar move much higher? If we get follow through, that concept of follow through next week.
I mean, it held 101, which I know we talked about 104 on here for a while, but 101 also, I mean, you go back to the 2015 highs a couple times in 2015. I mean, there's a lot of price history there at 101.
Right.
So is this your next leg higher? Remember, I mean, we got overbought a lot during the rally. Didn't get oversold at all. I put quotation marks around those words.
Actually expound on that, because sometimes I think we take for granted, right? Because we talk a lot of shop. When you put quotations around overbought and oversold, can you expound on that a little bit?
Well, just from the standpoint that we look at RSI, above 70 has been given this term overbought. Below 70 has been given this term oversold. Like it's been sold too much, right? That's when the average human, if you told them, oh, this stock's overbought. Oh, well, I don't want to own that. It's clearly gone up too much. And that's just not really how this indicator should be viewed. I'm not saying it doesn't work out that way sometimes. It's just not that the RSI on this asset has reached 70. I should sell it, or I don't want to own that.
Going back to someone you brought up before, JC Peretz, he would say something like, what's so wrong with demand being so great?
Yeah.
That something is being overbought.
Yeah.
So and it's overwhelming demand.
And it doesn't always mean you're buying some high-flying, unhealthy chart.
Right.
Go back to the dollar in July 2022. It's overbought. In this case, 70 plus daily RSI. It's a beautiful chart. It's coming out of a 2-month, 3-month consolidation. It's overbought. It's coming off an overbought reading. Like I said, I mean, this thing hit again 70 plus since summer 2021. We're on about 2 years now, June 2021. 13 times RSI hit overbought, quote unquote overbought in the last 2 years. 13 times.
And then
never hit oversold.
Never hit oversold. And here we are holding important levels near 101, which is a range that goes back.
It's an uptrend. I don't think it looks like a meme stock. I don't think it looks like a altcoin. It's a 28% move in, from the lows of May 21 to the highs of October of last year.
Right.
Let's call it 18 months. You've seen other assets do what in 18 months, 28%? How many times have stocks or other assets done that?
Right. It's important to compare it. You look at something like the euro versus the dollar, if we roll over here, right? Because since October of 22, the euro versus the dollar has moved higher, but is now hitting into underside potential resistance. And that's where we've seen since October, areas like international stocks do well. Is this the end for that thesis? TBD, right? If VEU can't get back above 55 and you're seeing an area like the euro failing or moving lower versus the dollar below the one spot level, I think that's a valid thesis to be very much attention to. Because if we get follow through next week with the dollar, trade away dollar using DXY, we could see stocks weaken from here on out. That's definitely a possibility. I'm not here to say what the market can or can't do. I know people love to say what the market is going to do. I have no clue. But Bitcoin resistance, it's priced in dollars, whether you like it or not. Resistance at the 30,000 level. Gold priced in dollars. Resistance at the 2,000 level. International stocks using
topping
something.
Out, yeah.
Yep, topping out.
Or seem to be from a price action.
Right. We need to see them clear current levels to confirm upside.
All this comes back to really everything on an absolute basis just needs to get it together.
Mm-hmm. We're looking for confirmation. Right. If we're going to see further upside, this goes back to just basic math. We need to see further upside.
And if we made money on a relative basis, I'd keep going in Europe. But
Right.
you don't make money on an absolute basis. So,
and then we've got economically sensitive metals, which maybe there's a fundamental perspective of economically sensitive to gold, but we're not going to go there here. But copper,
copper
right?
looks rough.
That's priced in dollars. It's an economically sensitive industrial metal.
Lowest level since November, below the 200 a day, back below $4, $4 to 4 and a dime, if you want to call that a range. I mean, I had a great move in January, and it's giving all that back plus some. Again, another asset flailing around.
And so patience is key in this type of environment. I know we talk large cap versus small cap, and in some ways you could talk growth versus value. Think about large cap names. You brought up Apple before. Apple is right up against important levels that it's been at in the past, right? So the highs from January 22 in Apple were near the 180 level, close to that now. Do we move a little bit higher into that? But that's a level where sellers have shown up and sold Apple before. Microsoft is at its March 22 highs, which a lot of areas haven't. There are some stocks, obviously, that are at new highs, but there's many stocks that are not even close to their March 22 highs. And here we have two bellwethers like NVIDIA and Microsoft at those levels. That's worth paying attention to as well. Do we see pause here? Go ahead.
I was going to say, even going back to your economically sensitive metals, nickel and aluminum.
Yeah.
Hitting their lowest levels since October. Both of those are breaking down to new lows. It is what it is. I mean, can we be sitting here in a year and Apple and Microsoft are 19% of the S&P, and the S&P has continued to move higher? I guess that's possible.
When you're
I just don't know what my point is. I don't know what all of this means for stocks. Not what you'd want to see.
Well, yeah, you'd love to see a broadening out.
Yeah.
Meaning a larger participation. But the fact remains from the end of January. So again, for our listeners, January was this tremendous event going into February of a really massive breadth thrust.
Yeah.
And a little bit of a rug pull, which was characterized by some of the things going on in regional banking that happened in February and March. And since then, since January, equal weight S&P is down on a relative basis 8% versus cap weighted S&P. So there is a narrowing. That's a fact. I'm not here to argue that that's not how it should be. There's a bifurcated market. You have small caps and micro caps falling to the downside while your large capped areas are moving to the upside. And that's a fact. I'm not here to say it should be one way or another, but we don't get to pretend that breadth is great. That part I know. We need to see small caps firm up and start to move higher from here. Same with micro caps, but more emphatically small caps and even some of the equal weight. I know that from time to time we look at like high beta versus low vol, that relationship continues to be weak since January, maybe even more since February. And the reason why that's important is we like to see high beta do well because that's a little more risk on taking on high beta names. And that's just not what we're seeing. Even in a risk on area like biotech, Ian, what are we seeing out of something like that?
Well, I mean, they're not as bad as the regional banks, but they're sure not helping out small caps, micro caps. Yeah, pretty lethargic. Obviously, got some big like Moderna, pretty rough. Pfizer at its lowest levels in over 2 years.
Yeah, and it broke through what some would call a head and shoulders breakdown in February. That's important information. And if you zoom out on something like PFE, Pfizer, and look at the highs it had made in December of 20 through January of 23, above its 1998, 2000 highs, and we're failing there now, there's a problem with Pfizer.
Can you hear me crying crocodile tears? Can you hear that?
I can.
They're flowing.
So sad. I'll give you a minute, Ian. I'll give you a minute. We'll go to a commercial break.
I just need to collect myself.
You should. The fact that Pfizer and Moderna could be struggling, I think that's an appropriate time for a commercial.
Yeah, I just need to get myself together for this last segment.
Okay, so this podcast is brought to our listeners by Adaptive Select ETF, listed on the NYSE under ticker ADPV. Helps investors access two of the most prevalent factors in markets, momentum and relative strength, through proprietary identification methods. The Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. As always, investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. Ian, are you recovered?
I am.
Okay, very good. So we've covered Biotech, Moderna, and Pfizer. Obviously, Pfizer and Moderna being the most prevalent COVID vaccine companies, struggling and approaching levels that most would not call an uptrend. We've discussed the dollar and its bullish engulfing this week, and if it has follow through next week, how that would have ramifications internationally, both developed and emerging markets. We've talked about important levels for financials and small caps, even regional banking. Anything else you want to cover before we close this one down?
I mean, same bonds.
Yeah, we haven't even talked bonds yet.
Nothing has happened. That same chart that we showed you clients at Launch and Learn. Same chart that we had in the latest, I believe it was the latest monthly market newsletter.
For sure.
With the red and green circles. That should spark some memory out there. We are still stuck in those ranges.
Yeah, really no new information. And, if we look at something like junk bonds versus 7 to 10 year treasuries, really critical level on a weekly basis. If that breaks down, could you see an environment where we see continued stock weakness potentially? And again, below 4180, you have to go through that level on something like the S&P 500 to see stocks move higher. Yep. And we're open to that. Like, it's okay. We're still above a 200-day moving average. Like you said, people are familiar with that information. That's step one from our market write-ups. But we also have ways to manage risk-off scenarios, whether it's with the ADPV ETF or within client portfolios or both that involve the 200-day moving average. So now it's about time will tell. This is a seasonal period, the middle of May, towards the end of May, where we see stocks are weak. Do we pull back into a 200-day moving average? And that's perfectly normal. Absolutely. And then move higher from there. Time will tell. We have to wait for the information to come in.
We're still waiting. Clients should know there's been a lot of waiting and doing nothing going on in portfolios.
Right.
And if you go by those charts that we have provided, and you should know the game plan, and nothing, we haven't moved outside of any boxes. We haven't moved into any colored circles. I know it's boring. It is what it is. I think, David, you and I were joking earlier. Over the last 5 weeks, I think there's been 4 trades.
Yep. Patience
One was
key.
A small win on Europe. And then the other got stopped out of a little bit of S&P and then bought it back the very next day. And we've continued to sit. There's just nothing's changed.
Yep. Patience is the name of the game in this current environment now that we have the range defined, and we'll continue to be patient and stalk. And that's okay. And these are good. And so with that, I would say we're up against the end of our time. And we'd love to recognize those moms out there, right?
Yes.
Your wife is an amazing mother. You have your own mother who's amazing. Same with my own wife, my mom and mother-in-law. And if you don't mind, one of my favorite concepts or covering the virtues of a mom is from Proverbs 31. And I encourage anybody listening to this, read Proverbs 31. And it's an interesting chapter, but I'll just read from there. The last part of that chapter just says, her children arise and call her blessed, her husband also, and he praises her. Many women do noble things, but you surpass them all. Charm is deceptive and beauty is fleeting, but a woman who fears the Lord is to be praised. Honor her for all that her hands have done, and let her works bring her praise at the city gate. So thank you to the mothers out there. You are incredible.
Beautiful. Yeah. God, I don't know where our household would be without our mother.
Amen, brother. And that's the way God meant it. She's
my mom kind of sometimes.
Yeah. I got you.
She's raising 2 kids right now. So
I got you. Emily would say the same, but God gives gifts to women that he doesn't give to men, and gives gifts to men that he doesn't give to women. But together, extremely powerful. And so we're super thankful to the moms out there for the sacrifices that you made, both physically, emotionally, and spiritually on the behalf of your children. Thank you so much. Enjoy your Mother's Day.
have a great weekend, everyone, and happy Mother's Day.